So we are at the end of the year. Today is November 1st, and usually end of the year, we oftentimes see a lot of opportunities in the market, in equity markets as well as into real estate. So I wanted to share some of that insights with you as to where you might want to pay attention to find some opportunities for yourself. So I will be sharing some interesting data around real estate for people who are looking to buy older homes as well as the newer homes. I'll share some information about some hot industries that is shaping up right now, and and most importantly, I want to talk to you guys about some of the recent trends that we're seeing in the market. So hopefully you'll find this information very helpful. So if you are new to the channel, my name is Deepak. I'm a tax code advisor. Please do subscribe, like, share, comment, and join my groups. We do discussion calls live where we talk about all kind of things together and try to make some sense out of this information. See, one of the problem we have right now with the market is people stop trusting the news. People don't really go to, they go to CNN and Fox, but they don't really believe what they're saying because they're oftentimes biased. And so am I. Most people are biased, but I think when we have a discussion in a group, when I say, hey, Google is good because of ABC, and you come back to me and say, yeah, true, but XYZ company is even better because of ABC, it gives a lot more substance to that conversation. We get a little bit better picture, and that's what I believe in. So I'm going to perhaps even start doing these update calls as a discussion call so that way I can get a little bit more perspective into what I'm talking about from you guys. So that's the plan. But for today, let me give you some updates. And if you haven't registered for the Wealth Summit, then I will strongly urge you that you register right now. I think you're going to find a lot more data there, a lot more information as to how you can plan out your financial year and how you can end 2024 with a bang. What kind of things you can do to build your wealth, to protect your wealth, to improve your savings in 2024, and what should you do from a planning perspective in 2025. So we'll be talking about all of that at the Wealth Summit, which is only 10 days away. So please do register. And if there's anything I can do to help you out, and if you're a student and you're not able to pay the price, then definitely reach out to me, and I'll see what I can do to help you out as well. All right. Having that said, let's get started and let's take a look at some of the opportunities. But before I do that, I think I should talk about the recent employment report because that talks a whole lot about the current state of economy. So the latest report reveals that only 12,000 jobs were added in the month of October, and we are talking about October 2024, the weakest job growth in 4 years. Last month, there were 254,000 new jobs. So obviously, this is a major sharp slowdown. So I don't like it, but hopefully it's temporary. Unemployment is still steady at 4.1%, so it's not that bad yet. I mean, historically we are lit around 5%, so we're still below that number, so we're still okay. Now, the Bureau of Labor Statistics (BLS) reportedly overestimated job creation in the month of August and September. So don't be surprised, you know. And the number they gave us that, hey, look, our estimates were off by 112,000 jobs. So, when you see the numbers are off by that big amount, you kind of question what's the reliability of all this data that we're really getting. So be cautious with that. One thing I do want to point out is that there are job gains, but in specific industries, specifically government roles and healthcare. So I love healthcare sector to begin with. I think that is a good sector if you're looking for a job, if you're studying, or even if you're investing. I think that's a very good sector. But government is continuing to increase their spending as well. So sectors like manufacturing, leisure, hospitality, retail, even transportation are facing job losses. And I will have some more update related to construction as well for you, but that is also happening. The JOLTS report shows an increase in layoffs and a downward trend in job openings. So that is obviously hinting at the cooler labor market. And that's probably one of the reasons why Feds are going to continue to do those rate cuts. And as I said in my last video, that they are expecting to do another 0.25 rate cut in just this week. So uh, fewer people are also quitting jobs. It's not a good thing. I mean, you want people to be able to move around, but when people are not quitting, that means they're more scared. They just don't want to move around that much. That means again, it's a signaling that there's a shift back to an employer-driven market. So be careful with that. Despite the negative report, the White House has released a statement claiming a strong economy with low unemployment under the current administration, and which is true. And I talked about all of that in the part one of this video. So go take a look at that. The poorest job report has highlighted expectations for Federal Reserve rate cut in November and perhaps another one in December to deal with this problem. So keep an eye out for that. Now, you would think that this is going to have a major impact on stock market. Now, despite the negative report, the stock market actually opened higher, and we can see, I guess not today, right now we're getting a Diwali discount on in the stock market. A lot of things are down, but I'm talking about overall, since these reports came out, things were still looking good. So, whenever Feds talk about lowering the interest rate, the stock market usually get really excited about that. So anyhow, that's what's happening with the job market. I thought that's very important to talk about before I talk about some of the other trends in the market. Now, the home builders are also issuing some warnings right now. As I'm reading the news right here, we're looking at D.R. Horton, the largest U.S. home builder. They are, flashing red lights all over the place for 2025. Now, if you take a look at their, financial statement, the stock dropped almost 11% after the report came out that they have been declining sales, and they are projecting even less sales in 2025. And they're thinking that, buyers are just not in the market. D.R. Horton homes in Florida and Texas are showing the price reduction with some homes listed below their original purchase price. So if you are in those two markets, you want to take a look at that. And they're building smaller homes. So again, because of affordability problems. So pay attention to that. D.R. Horton is buying down mortgage rates, to attract buyers. They're offering people 4.5, even 5.5% interest rates. So which obviously the regular traditional people who are in resale market cannot afford. So that's so the reason I'm telling you that they're trying every trick in the book to attract buyers in Florida and Texas, but they're really having a hard time. So obviously, when they buy down the rates, it makes it super easy for people to afford it. But if you're in resale market, that is just not possible. These southern states, that's where you want to watch out for. They're just oversupply, and there's a lot of declining in prices. But states like Florida and Texas are seeing the highest inventory levels in the last 7 years. So obviously, when pandemic hit, a lot of people did move into those areas. A lot of investors purchased housing in in those areas as well, and that's one of the reasons why they are cooling down. Even markets like Dallas, Austin, and Houston, it's starting to cool down. Um, the builders are not really helping a whole lot either. If you take a look at D.R. Horton, for example, 60%, almost 70% of their revenue comes from southern eastern states, and those are the states where there's a lot of inventory and there's a lot of price cut. So, we need to pay attention to these metrics, because if we know where there's a lot of home building is happening, that tells us where there's going to be a lot of inventory, and we will have a little bit harder time in getting appreciation for home price. Another thing I looked at in their statement is that over half of D.R. Horton's buyers are using FHA or VA loans, which is a little bit surprising. You would think that more traditional buyers would be there, but, over half, FHA and VA loan, which generally requires lower down payments. They also have a higher risk. So again, putting us in those troubles again. I mean, right now, I think people are sitting on a lot of good equity in housing, people who purchased the homes in previous years and they refinance them at a lower interest rate. But all these people who are buying right now, look around all the communities in Texas, in Florida, and if you are looking at your neighbor, there's a very high likelihood that they're using FHA or VA loan. So, what things will look like 5 years from now, makes me wonder about the real estate market right. But when we look at all this stuff, there are opportunities. So if I were a buyer right now, I'll be looking into areas where I think there will be good appreciation on land. That means there's just not enough land to build newer homes. I will look into those areas, and I'll try to look for deals from these new builders. Oftentimes you can negotiate an interest rate with them. You can negotiate what they can do for you, maybe even build an extra room or give you some sort of other discount. So that's where I see an opportunity right now, because builders are hurting for sales, especially during the end of the year. So I'm in market right now looking for a property myself because of the very same reason. Okay, another place I see a lot of opportunities right now is in data centers. The demand for data centers is rising due to AI and cloud applications. We are expecting it to grow at 30% annual growth rate. So that's a pretty decent appreciation. The US data center market have doubled in the last 4 years. Can you imagine that? Now we knew this when ChatGPT came out. So if you did not look into this opportunity, you want to ask yourself that question, why didn't you pay attention? And even right now, we already know that data centers are going to grow at 30% annually. So why are we not looking into this area? Now, you probably all heard that there's a lot of vacancy all over the place. Commercial real estate is doomed, this and that. But have you looked into data center? The vacancy has dropped in data centers to 3%. And rents has surged almost 37%. These companies are paying premium to get access to data centers. So if I were you, I'll be looking at companies who are building the data centers, who are renting to data center. I think there are a lot of opportunities there. So I will definitely pay some attention to that. I would also pay attention to security companies and power companies who are providing support to these data centers as well. Now, rate cuts obviously are also helping with the investment in these areas as well. People who already have data centers, perhaps they will consider refinancing, especially in last couple of years. The estimated $570 billion in loans will mature in 2025. That means, these people will be looking out to refinance, looking out to bring on new capital in the area. So look out for those opportunities. You will find a lot of demand for brokerage analysts. That means, these companies will be willing to pay even more to people who can analyze and find these deals. But I'm sharing all this information with you right now. So if we compare this with office sector, there is a positive net absorption for offices in Q2 of 2024. Major companies are basically enforcing that their employees come back. So you will continue to see that trend over the next years as well. So you will start to see office spaces are starting to get rented again, and you will start to see the demand coming back. uh, CEOs are there was a survey done of multiple CEOs, so not just one CEO, but that survey is predicting that most people will return back to office over the next 3 years. So that's an opportunity. If that does happen, and you don't need that information from me. Just look around you, ask your friends, ask your family members who are being required to go back to work. So in those areas where you currently see empty buildings, there could be an opportunity. Now, if you're an investor and you're thinking about buying something, then look out for distressed assets. There could be a lot of buying opportunities. You can probably even partner up with some private equity firms. You can partner up with your friends. And if you can kind of pool some money together, you can get a significant discount right now. The office sector is obviously less favored by new investors because of all the stuff that we hear in the market. But if you can just look out 5 years from now, I think you might find some opportunity there. So I think there are some great opportunities in real estate market, and I think there are some great opportunities in data center market. I think there are good opportunities in the commercial space as well. So pay attention to those markets. And as I said, we are expecting to get some more rate cut as well. I don't think it's going to have a major impact on the interest rate, at least not just yet. But if we see a couple more bad unemployment reports and banks start to feel that unemployment is a real issue, then we will start to see some rate cuts happening for borrowers like us. So those are all the market updates. I think if you watch the part one and part two, I think you got a very good comprehensive information about as to what's happening in the market. But I need some help from you. Look, if you like this information, you want me to continue doing this, then I need to know from you. Just send me a message. Let me know that, yeah, Deepak, this was awesome. I loved it. Thank you so much for sharing. Say something so I know that it's worthwhile to you. Because if it's not, then what's the point? I can keep all that information to myself and use it to make my financial decisions. So I hope you will definitely share your information with me. All right. Thank you so much. And I'm looking forward to seeing you at the Wealth Summit.